Hey guys, this is UC from My Trade Price. Welcome to the weekly episode where we go over some of the charts that we follow and trade. So you're looking at a SPY weekly chart. Here's the trend line and then uptrend line from the pandemic low point from March of last year. So the price broke below the uptrend line this week, but somehow we managed to close up. However, note that this is also a 3-week pullback, right? 3 weeks of selling, just like what we had in I believe like September and October time frame, right? So we had 3 weeks of selling right here as well, and which is exactly what we did over here as well. And that 3 weeks of selling would bring us back to, let's say, a 20 or an 18-day SMA, which is this green line, right? And from there we would see bounces. So, and which we saw last week as well. However, the bounces from here would be strong enough so that we would actually end up breaking out. But let's see what happens next week. The sentiment is still kind of pretty weak right now. So we'll see how in the daily time frame the charts look like. But this was the sort of the bounce area, right? That's where the reason we loaded the boat was like we were really on the support zone. So there was no way we were going to break this support without at least getting us a first touch bounce, right? Which we did right over here as well, right here. So almost right here as well. So now this becomes an important psychological support level to look for next week. We have these two big daily bars with nice big ranges. So it is possible we have a few days of inside days before the market decides to go one way or the other, because on the upside 385 area becomes the sort of the resistance, and on top of that 386, 387 all are some resistance areas. In the shorter time frame we also will have some downtrend line that we'll have to kind of worry about. But right now this is what the situation looks like in the daily time frame. In the Qs, again, if I draw a trend line from the March lows of last year, let's do that right now actually. So we are comfortably below the uptrend line, right? And if I go to weekly chart right here, this 297.5 was such a nice level to load the boat again, right? Why? Because this was the resistance in September, again in October, and then in November it was a resistance, but towards the later half of November we did break out of that, right? And since then we have been in this sort of a bull channel. Normally speaking, usually whenever we have this sort of a channel breakout, right, and then we break down, prices like to test the channel where it broke out from, which it did this past week. So this 297.5 is the support that everybody will be kind of looking at this coming week to see how the market reacts to this level, right? So we'll see what happens. But in the lower time frame, if I drill down to, let's say, I don't know, daily, you can see we have a hammer bar, right? So right now we need some sort of confirmation that the buyers are back and want to take the price up. But let's see what will happen if I drill into, let's say, a 5-minute chart right here. I'll show you a little. So yeah, so we are in this downward channel, right? And these are the important price levels that I will be considering to kind of gauge the market sentiment, whether we go up or below this 312, because that was the support which we broke down from. Then we bounced back up, couldn't really move up from there, sold off again, and then we came back above 305, right? 305 was the intraday level we were looking at on Friday. So this 312 can be a resistance. Let's see if we go up there and then start selling down a little bit, or if we break out above that towards the channel downtrend line where this 318, 317.5 area can become a resistance point where we kind of sell off from. But if we don't, if we just go down below 312, we can make a sort of an head and shoulders chart. But again, these are all scenarios. We don't know if it'll happen or not, but just kind of be open to these kind of scenarios and just see what happens. But if we break down, 297 is the number where a lot of people would like to probably might have gone long against, and they have stop orders there, so which can trigger further sell-off in the market. So if we go back in the daily time frame, if we break down from that level as well, then we have multiple levels below 288, 282.5. But on a higher time frame, if you see on a weekly time frame, right, this is the breaking point. So if we break down below 297 as well, then we have, I think the next major support comes around 267, right? That would be almost, I believe, like maybe around 15 to 20% sell-off in the market from the highs, right? So that would mark the 20% sell-off, and essentially could be a start of the bear market. We don't know, but the volume was pretty huge the last 2 weeks in Qs. Okay, here's the chart of Tesla. We really bounced hard from the monthly support level of 540, right, which was like right this one. So that was a pretty quick trade, I would say, right? So that trade is done, but now the uptrend line, the uptrend is kind of broken. So we'll just have to drill down to a lower time frame and see what's going on. So in the daily time frame, I don't know why TD MetaTrader or this Thinkorswim is showing these long top wicks. I think these are just errors. These are not true price levels that it touched on those days, so it just kind of looks weird, but just ignore that for right now, okay? Because in the lower time frame, if you go to, let's say, 4 hourly, you don't see those long top wicks. So it's definitely something wrong with this platform for showing the Tesla price like that. So in the 4 hourly, we have this long bottom wick, but again, the following 4 hourly bar did not really show any strength. It was more of an inside bar, and still the pressure remains to the downside until or unless we gonna get above this 624, 630 level, right? That's where we have multiple touch points where this chart kind of retraced back down once it touches that level. So 540 remains the sort of a psychological support, monthly support. Breaking down from there, we'll see what happens. Or if we trade down and then bounce back up, it could be a double bottom scenario. But right now this trend is still down, so unless or until we kind of break that trend and start moving up above 654, 670 area, which was a nice support level as well, it's hard to become really aggressively bullish on this name. Okay, here's the weekly chart of Amazon. You can see we are for a monthly or a weekly chart, sorry, we were just trading in this long 2800, 2900 to 34, 3300 range, right? People were looking for the breakout above 3400, but that did not really happen. So we broke down in the weekly chart. 4 weeks of bearish price action led us to this monthly support of 2070, 2080, right? We have touch points right here, and then we have this first touch bounce right here last week. Now let's see if it reverses from here or if it wants to keep going further down, because we have some good support levels around 2750 area and 2630. However, if we move back up, let's see what's going on in the daily. Again, long bottom wick on Friday because of the big bounce. Still couldn't go back above Thursday's high, which is 3060, 3058. But look at this, we are still in this down channel, right? Where the price is moving sort of in the downward fashion. So let's see if we move back above this finally, or if we gotta go back like here and then sell off further to make a higher low, or it just wants to go and touch that monthly support again. Again, we'll just go and take it day by day, but this is the sort of the price action I'm expecting, and then we'll just kind of react to that price action as it happens. All right, here's the darling stock of America, Apple. 117 remains the downside support level that I am watching. if that one breaks, then I can expect 112.6 as the downside target, right? We have few touch points right here because the market bounced from that area. 117 provided nice support. It was resistance right here, resistance right here, right here. So that's sort of an important level. Anything below that, 112 has more touch points, so that remains the sort of the price to target on the downside break of 117. Let's see, this last week we have top wick, bottom wick, and a small body, right? So a little pause to the selling that's been going on. Okay, will that lead to some higher prices in the future? Of course, time will tell. We can't really know, but we'll plan for it if that happens. If that happens, sure, we'll play the call side as well, but the pressure remains to the downside, right? Because trend is down. So here's the Friday hammer bar after the sort of the pause here on Thursday. So let's see if we get a bounce above 122. If that happens, or if the prices kind of creep up a little bit, then 123.4 to 125.7 are the upside targets. And moving into a lower time frame, you can see if we break above this channel, that could be a nice confirmation that there is some sort of bottom here in the shorter term, right? So that would be nice. But let's get above 122, 123.4, and eventually above 125.7 before we start really getting aggressive towards the call side, because it could just move up a little bit here, find some resistance, and then sell off from this channel trend line, right? So we'll see what happens. We'll just take it day by day. This is the weekly chart of Netflix. Actually held pretty nicely. I mean, compared to other tech stocks that sold off, right? It kind of held its previous week's range, I would say, right? And still managed to not completely break down, right? Yeah, it looks sort of bad because of the big weekly bearish bar, but still okay. You know, it's not completely broken. So this 500 area, 498 remains sort of the higher level support, and on the upside we have this 557 area, right? That's because we have double top right here in the weekly time frame. Anything above that, yes, sure, we can be aggressively long and target higher prices, but right now it's sort of in a range for the Netflix. But Netflix does provide big range, so you can still look at it on the daily chart. Again, channel down, right, like other stocks. Hammer bar on Friday, like other stocks. So 518 remains the sort of the high of the day of Friday. So we'll look for the price to get above that, and then eventually the area that I'm looking at considering is 531 that it needs to break above, and then 538 was, you know, the longest support for the longest time, because that's where we have all these bounces from, and then eventually breaking down led us to 500. So that 538 can be sort of the resistance point. So we'll definitely try some puts if it fails from there. Okay, let's move on to another chart. Let's look at what one I wanted to see. Google actually is one of the very nice and strong charts, relatively very strong, right? It doesn't even have a red week, so that shows you the strength in this name, and really nicely made a double bottom here at 1990. We have two consecutive weeks of support right there, and this 2108 area remains sort of the breakout level, you can say, right? So anything above that, definitely I'm looking to play calls as a breakout happens, because it's a relatively stronger chart, nice volume, bottom wick. So those are all signs of a strong chart. And moving into a lower time frame, let's get into a lower time frame daily. So it could look like to be a bull flag, I would say, sort of, right? Not really, but again, if you just want to classify it like that. So some consolidation here in the last few days, right, from between 2060 and 2000, all this congestion zone. I see more green bars, more bullish trend bars. No, any red day. We don't really see another consecutive follow through to that bearish day. So that tells you that the buyers are stepping in and buying any dips. So I'm hoping that we break out of this 2108 pressure cooker top. And once we do, definitely we can see higher prices above 2146, which is sort of the all-time high right now. For it to break down, it needs to get below 2027, and then eventually 1990 is where a lot of stop orders can be waiting for people who are long this name. Okay, so if we break down from there, we have a little bit of gap here, and then a support level all the way till 1915, and still it can maintain its uptrend if it goes there and tries to bounce up from there. So nothing wrong with this chart. Yes, the market sentiment is bearish, but if it bounces, if market bounces, gets back strong, this is a good leading chart that we can keep an eye on to trade. Okay, guys, hopefully you guys like this little mini video weekly, and we will definitely post some ideas and charts on the private Twitter feed for folks. So if you have any questions, please do let us know. I have the chart levels, the price levels, all of these in the table format ready to be posted. So I'll do that here, and this is what it looks like. This is what it is for tomorrow and next few days. These are all the calls and puts that we're looking to play. And whenever we play them out, we'll alert you. We'll give you, provide all the hand-holding that we can. But please do be proactive as you have these charts and price levels in front of you. I mean, the whole purpose of giving it out is so that you can be independent. Also, you can play it out as well. Everybody has different goals, different risk profiles. So, based on where we are trading, what level we are, where we at, if you want to play equity, if you want to get into options. So decide that. And once you have decided that, make sure, these option plays are fast. So you have the options in front of you in the screen that you would like to trade at that level, so that you're not wasting time trying to figure out which option I'm going to buy, what strike price, what expiration. And then, by the time you get into that trade, almost half the move is already done, and then you're kind of late. So just, a little suggestion that it's always good to have the option orders and everything else sort of all squared out before the market open, because the market orders are, frankly speaking, for execution. All the thought process, all the thinking should have already been done. So you should be a process. It should be a stress-free process where you already know where you will be getting, what you will be getting in, and what is your stop loss, because stop losses save lives, right? And do not be I was having a discussion this past week with somebody, a friend of mine, where he just did not take a stop loss, and he's deep in red because of this whole market move down. And the reason was, after talking to him, I figured out was that his ego would kick in, and he would be like, okay, I cannot be wrong in this market. I cannot be wrong. So when you have that attitude, market doesn't really care, right? Market is going to do whatever it wants to do. So it is you who needs to protect your capital. So if it goes against you, it goes against you. That does not make you a bad trader. That does not mean that your analysis was wrong. The market did not react, or it did not really move the way you wanted it to move. So it's okay if you're wrong. It's okay to be wrong for a small loss, rather than holding on to it and then just one thing leads to the other. You don't feel hungry, you don't feel like talking to anybody because you're just down and thinking about the freaking price all time long, even on the weekend. And then just you lose other opportunities because your capital is all tied up. And it just does not make you a consistent trader. If you want to be a trader, losses are part of this game. As long as you can keep and manage those losses, keep them small, your winning trades will take care of it in a cumulative fashion, where you will be net your net position will be in profit. So think from that risk management perspective as well. Okay, hope you guys like this little video, and if you have any comments and questions, please don't hesitate to email us or let us know. Okay, thank you.